Hello guys, welcome back to my YouTube channel. I'm Geoffrey Code. In case you are new, kindly subscribe to our channel, and those who have been watching our channel content, kindly subscribe too, because from the analytics we're seeing that many are watching but they are not subscribing. So by subscribing you help the YouTube algorithm to push this content to many other more people who really need it. So today we'll be going to look at DeFi, decentralized finance, and in detailed notes we'll be able to see what you are able to do with this decentralized finance, because you've been hearing the DeFi term but maybe you don't know what to do with it, or how it's all related by, or maybe you just know part of it. So we are going to look at all the decentralized finance section and put it into very detailed video. So let's get into it. Okay, so today we want to talk about decentralized finance, because I do believe that this is where the future is actually going to. So we've had the traditional finance system operating in the finance sector, but now the decentralized one is actually what's going to take over. So what's a decentralized finance? So looking at the meaning, DeFi, decentralized finance, in short form DeFi, is a financial system that operates without the need for traditional centralized intermediaries such as the bank, global exchange. So let's say like you want to invest your money, all what people do use is the banks. Let's say you go give them your money, or you want to lend from them, you have to lend from the banks or the global exchanges. Let's say you want to exchange your fiat currency from your country currency to another country. Let's say you want to change like something from the Kenyan currency to USD. You have to go to the bank so that you can be able to do that. So that's now what this DeFi, decentralized finance, is coming to actually help, without needing to put trust on someone who is actually operating or is the manager of those financial system. So the aspects of this decentralized finance, it has to deal with the exchanging money, investing, insurance, borrowing, and lending. So those are the 5 aspects of this decentralized finance that even the traditional finance are doing. So that is, we are just transferring what they are doing to the decentralized one, where there is no censorship. So how DeFi work? So rather than you putting trust on a traditional bank to process your transactions or to store your money safely, so DeFi will be using a technology called blockchain. So it's where everything is audited and it can be publicly seen to anyone. So this finance system, all of them, they operate based on infrastructure to operate on and a currency to operate with. So there must be an infrastructure where the finance system are operating on, and the currency. Yeah, so that's the main thing that they should be having so that they can operate the finance structure and the currency. So one of the finance infrastructure that we have is called Ethereum, which is a platform for writing decentralized program. So through Ethereum we are able to create smart contracts. These are automated code that can be used to manage financial services. So instead of having to put your trust on a bank, we have the Ethereum platform, which has a smart contract coded for these financial services. Okay, so we have the Ethereum platform, but now for it to be reliable, secure, decentralized finance, we need to have a stable coin. Something that is pegged to like $1, so that we know when we have this one coin token, we have $1. So Bitcoin is not compatible with the Ethereum platform, and Ethereum, which is ETH token, is highly volatile. So that's now is the need to have something that is stable, so that its value is pegged to the real world dollar. So for us to have the stable coin, we need something called DAI. Is a decentralized stable coin pegged against the US dollar, meaning one DAI is equal to a value of $1. So DAI's value is backed by cryptocurrency collateral, rather than being backed directly by US dollar reserve, hence ideal currency for DeFi. So I said we need a stable coin instead of having highly volatile crypto tokens like the Ethereum. So we need something called DAI. DAI is a stable coin. Its value is actually pegged to the dollar. One DAI is $1, and it's backed by the cryptocurrency collateral, and it's over collateralized. So let's say you want to borrow DAI from a financial lending system in the DeFi protocol. You'll need to put a collateral of either ETH or any other token so that you can now borrow DAI, and the ratio, you have to put more of your collateral to borrow few of this DAI, so that even if you can't pay back the DAI, there's still that your collateral which is stored in the financial lending protocol. So that's what actually made the 2008 crisis, where people were borrowing money more than they could actually pay back, and it brought about the financial crisis of 2008. So that is what now the DeFi system is coming to outgrow, so that you have to put a collateral so that you can now lend from the protocol, and you have to put more of your collateral there. So one of the aspects we said about a DeFi, there should be an exchanging part of it. So decentralized exchange DEX allows us to buy, sell, and trade cryptocurrency on Ethereum platform without having to go through an exchange operator and without any fees for withdrawing funds. So let's say you want to buy money from you have a USD, you want to buy euro. You have to go through the banks and they have to have all your details. You have to finish a KYC with them so that you can now be able to exchange that USD to euro. But now, or using the centralized exchanges like Binance, you have to finish a KYC with them so that you can now exchange either your Ethereum to USD. But now the decentralized finance is very okay, that you just have to deposit your cryptocurrency to your wallet, and then you can now access them to do exchanges, either swap from one token to another without needing any KYC. And the good thing about it is that once your token is in your wallet, you can access them through that wallet without needing to deposit your currency into their protocol. The smart contract will now be able to integrate between your wallet and their system and their protocol, so that you can now swap your tokens directly with your wallet. So under decentralized investing, it involves crypto tokens. Instead of putting your fund in banks that offer very low APY, you could deposit fund in a Uniswap liquidity pool. So Uniswap is a DeFi as a protocol that offers much better APY. So instead of that putting your money in the banks, which can only offer up to 1%, Uniswap can have up to 30% APY. But we have even much better decentralized investing ways that can offer even up to 300% APY. This is the Aave protocol, so that you can also use this one on the Ethereum network. Just have to deposit there. You can see there's DAI, market size 1.41 billion, total borrowed that amount. Then you can deposit and start earning. Whenever you deposit your collateral there, you start earning that amount. Then if you borrow, there's an APR for you, and then so that whenever you borrow, you put your collateral here, you start earning, and then you can now borrow. So the total APY that you earn is much higher than the amount that you'll have to pay back based on what you borrow, so that you can still gain some interest even if you borrow from this protocol. So just to see some of the tokens that are here, you can access into this protocol. USDC coin, the USDT, we have Balancer there. So there are a number of these tokens you can access here instead of having to put your money in the bank, just use the decentralized finance on this one. So we do also have other network that you can use, because Ethereum is way expensive based on the gas fees. So we have other lending and borrowing protocol on the Binance Smart Chain, like Venus. You can use their protocol. The transaction charges are very low. So under the DeFi investing, we said that you can invest here and earn some crazy PY. So you can see just an example of another protocol in the Binance Smart Chain, the Themanorfarm, which was created by the drip developers. Here you can earn up to 98% APY. So you can compare this one with what the banks can offer to you. It's really crazy. So under the Themanorfarm, you can earn up to that in the drip BUSD LP garden, and then again in the drip community, where we've been if you watch my video about the drip token, we're still compounding there. We can earn up to 360%, 365% APY. So it's really crazy on the DeFi system. Another protocol that you can check on is called Titano. Just hold the token and then they'll be paying you their tokens every 30 minutes, and the APYs there are really crazy. So for this one to be complete, there must be part of insurance, and smart contracts in the DeFi system make peer-to-peer decentralized insurance possible too. In a DeFi system, you can connect with anyone around the world who is willing to insure your assets, and on the other hand, you can insure other people's assets at a premium without ever having to go through an insurance company or agent. So this is whereby people put their funds, those who have much funds, they put in a protocol, so that those who want to be insured, they come and then put their collateral. First, you put your collateral there, so that you can be insured whenever what you have insured happens. Let's say, like for example, the traditional financial system. Let's say you insure your car against stealing. So when that car gets stolen, now they pay you for that, but you have to pay them first. So that's one. Now there is element of trusting the bank that they will now do as per the agreement. But now here, just you in the DeFi system, you just put your money there, and then there is an oracle in the system that picks details. So let's say you insure yourself, whenever the temperature rises to 95 degrees Celsius, you get amount of earning. So there is an oracle that receive data based on the weather. We have this one, they call them the chain links, that feed the smart contracts with those data. So whenever that happens, it automatically pays you based on what you had insured. So there's DeFi borrowing and lending, and you could, through DeFi, secure a loan in a matter of minutes without having to go through a complicated or restrictive application process. You can use Compound. Compound is an Ethereum based app to deposit your cryptocurrency as collateral and borrow fiat money against it. So this lending protocol, instead of you having to go to the bank and you have to finish so many things, KYC, and be eligible for their lending, you can just have your collateral, let's say Ethereum, put into the Compound app, and then you get, let's say you are speculating that Ethereum will rise in the near future, so you don't want to sell your Ethereum, so you just give them, and then they give you the USDT value, the US dollar value for your Ethereum. So then they will be giving you DAI, which we said is pegged to the US dollar. So it's better that you know how to do this borrowing and lending. So there's no KYC, just have your Ethereum into your wallet, and then you can now access the Compound protocol, so that you can do the lending. You can also deposit with them, so that other guys who want to borrow from the pool, then now you'll be able to receive much interest based on what you did put in the pool for other guys who want to borrow. So that's what you call now the yield farming. So when you put there with them, you lend to them, you will be able to earn some interest whenever someone borrows from the pool. So this is the compound protocol. You can access it using your Trust wallet, and then you need to deposit some Ethereum into your wallet, and then you'll be able to interact with this protocol. So you can see some of the markets, what people are doing here already. A lot of fund is put here. Just looking at the home, you can see the compound protocol currently has that amount of dollars of ETH, adding 0.1% interest, and then for Link, there's a lot of money here that is being put into this protocol.